If you are an algo trader looking for high returns, you might be interested in knowing what percentage return on investment, ROI, do top hedge funds average. Hedge funds are private investment vehicles that use various strategies to generate profits, such as short selling, leverage, derivatives, arbitrage, and more. Hedge funds are often considered risky and volatile, but they can also offer impressive returns to their clients. However, measuring the performance of hedge funds is not straightforward. There is no standard definition of what constitutes a top hedge fund, and different sources may use different criteria to rank them. Moreover, hedge funds are not required to disclose their returns publicly, and they may charge hefty fees that reduce the net returns for investors. Therefore, the reported returns of hedge funds may not reflect the actual returns that investors receive. According to data from Hedge Fund Research, HFR, the average annual return of hedge funds from 1990 to 2021 was 11.6%, net of fees. This compares favorably with the S&P 500 index, which returned 10.7% over the same period. However, this does not mean that hedge funds always outperform the market. In fact, in some years, such as 2008, 2011 and 2020, hedge funds underperformed the market significantly. Moreover, the average return of hedge funds masks a large dispersion among individual funds. Some hedge funds have achieved spectacular returns over their lifetimes, such as Renaissance Technologies Medallion Fund, which reportedly returned 66% annually from 1988 to 2018, or Bridgewater Associates Pure Alpha Fund, which returned 14.6% annually from 1991 to 2019. On the other hand, some hedge funds have suffered huge losses or even collapsed, such as Long-Term Capital Management, which lost $4.6 billion in 1998, or Amaranth. One way to estimate the average ROI of top hedge funds is to look at the data from industry databases or publications that track and rank hedge funds based on their performance. For example, according to the 2020 Preqin Global Hedge Fund Report, the top 10% of hedge funds by net returns generated an average ROI of 24.3% in 2019, while the median hedge fund returned 8.9%. Another source, the 2020 LCH Investments Top 20 Hedge Fund Managers Report, ranked the top 20 hedge fund managers by their net gains since inception. The report found that the top 20 hedge fund managers generated an average annualized ROI of 18.6% from inception to the end of 2019. However, these data sources have some limitations. They may not cover all the hedge funds in the market, and they may have different methodologies and timeframes for calculating and comparing returns. Moreover, they may not account for survivorship bias, which means that only the successful hedge funds that have survived over time are included in the analysis, while the failed ones are excluded. This can inflate the average returns of hedge funds and create a distorted picture of their performance. Therefore, another way to estimate the average ROI of top hedge funds is to look at the data from benchmark indices that represent the performance of the hedge fund industry as a whole or specific segments of it. For example, according to the HFRI Fund Weighted Composite Index, which tracks the performance of over 2,000 hedge funds across various strategies and regions, the average annualized ROI of hedge funds was 10.4% from January 1990 to December 2019. Another index, the Barclay Hedge Fund Index, which tracks the performance of over 6,000 hedge funds across various categories and subcategories, reported an average annualized ROI of 9.1% for the same period. However, these indices also have some drawbacks. They may not capture the full diversity and complexity of the hedge fund industry, and they may have different criteria for selecting and weighting the hedge funds in their samples. Moreover, they may not reflect the impact of fees, liquidity constraints, leverage, and other factors that affect the actual returns that investors receive from hedge funds. In conclusion, there is no definitive answer to what percentage ROI do top hedge funds average. Different sources may provide different estimates based on different definitions, datasets, methodologies, and timeframes. However, based on some of the available data sources, it seems that top hedge funds can generate double-digit returns on average over time, but they also face significant risks and challenges that may reduce their net returns for investors. Thanks for watching. If you enjoyed this video, please hit the like button and subscribe to my channel for more content like this. Until next time, happy trading!